Welcome to Global Investment Insights, a weekly podcast brought to you by ADCB Asset Management. My name is Kishore Muktinutalapati, Head of Investment Strategy. With an objective to empower you with investment insights, on this program we discuss various perspectives shaping the global investment landscape. One of the famous quotes from Asia goes, "The flower that blooms in adversity is the most rare and beautiful of all." The same could be said about Japanese equities at this juncture. Against the backdrop of the global economy where prospects are not extraordinarily strong, relative attractions of Japanese equities are hard to ignore. Let us explore the case for Japan in detail. Japan has been cautious in removing its COVID-19 restrictions, at least in comparison to elsewhere in the developed world. This means that the gains from increased operational leverage are yet to play out fully in Japan. International Monetary Fund, IMF, in its July update of the World Economic Outlook, estimated the GDP growth of Japan to remain steady at 1.7% this year and the next. While this may not sound very much in absolute terms, this stability in growth needs to be appreciated considering the rapid slowdown in the growth of other advanced economies, which IMF estimates to slow from 5.2% in 2021 to 2.5% this year and further to 1.4% in 2023. Furthermore, unlike in Western developed economies, Japan does not have a major inflation problem. For the context, Japanese consumer price inflation is well below 3%, which is a rarity these days. Better growth inflation dynamic does put the Japanese economy at a different place than other developed economies where the operational leverage gains have been realized already, growth is slowing incrementally, and inflation is a major headwind. This divergence in economic path allows the Japanese fiscal and monetary policies to be different too. Especially the monetary policy in Japan is unlikely to tighten anytime soon. The broader political scenario is positive too. Unlike in the US and Europe, Japan does not face any immediate political risks. On the currency side, traditionally the Japanese yen enjoyed the safe haven status, and this has helped it gain during periods of global economic weakness. However, because of the policy and real rate divergence, as well as negative terms of trade shock from higher commodity prices, the yen has recently fallen to fresh record lows on real effective exchange rate basis. One of the largest transmission channels of a weaker yen into supporting domestic services and employment is through tourism activity, which should pick up as COVID-19 related restrictions on foreign travelers are eased. Corporate sector related improvements have been a source of resilience for Japanese equities. Profit margins for the corporate sector remain elevated compared to the history and are being helped by industry consolidation. Japanese equity market valuations are cheap. The current 12-month forward price earnings ratio for MSCI Japan is 12.6 times, trading at the lower end of the range observed over the past 10 years, during which the metric averaged 14 times. This compares with the developed world aggregate where the current 12-month forward price earnings multiple is in line with the 10-year average of 15.3 times. Taking all these together, we remain overweight Japan in our global equity allocation. We believe that Japan and other parts of Asia offer diversification opportunities given where they are in the post-COVID economic cycle. Unlike in the West, the recession probabilities are incredibly low in the East. However, though not our base case, in case a global recession does materialize, most equity segments are likely to post losses. Even then, given the depressed valuations, Japanese equities could still outperform in relative sense. Especially, they could extend their year-to-date outperformance in local currency terms. Further, when the Japanese yen bottoms out, investors in international currency terms are likely to register stronger outperformance. Thanks for listening. We hope you found this podcast useful. If you did, please do share this and other episodes with family, friends, and colleagues. For more information on what was discussed on this podcast, please reach out to your contact at ADCB. You can also log on to our website at www.adcbam.com for more information. This is Kishore Muktinutalapati signing off.